So this is part 2, a follow-up video from the last video that I just dropped about how to spot the Fibonacci retracements and put them on your chart. And in this video, guys, we're gonna go over how to trade those specific levels and why you need to wait for a reaction and not just use those and predict that it's gonna drop down to the next level. You have to actually wait for a reaction to these levels. So let's share our screen and show you guys what I mean and dive into a little bit of a couple examples and show you guys the trades that I also took recently just using the Fibonacci retracements and a trade that I took today. So you have to understand, as traders, we're trying to find the best probable setup in our favor. We're not predictors. We're here to actually wait for a reaction, wait for a setup for ourselves, and then we take a trade, guys. You don't want to rush into anything or just take it because you think and believe it's going to go to a specific area. No, you actually have to wait for a reaction. So let's show you guys what I mean by that, and I'll show you guys how awesome it is to wait for a reaction. So now that you already know how to plot Fibonacci retracements on your chart, in this case, guys, we're going to use the downtrend, grabbing the highest point to the lowest point, and I want to show you guys, for an example, what it's like to trade these on the 5 minutes and why it's so important to wait for a reaction instead of trying to predict where it's going to go. So now I'm on the 5-minute chart, the chart that we usually trade at open, as well as other higher time frames. But in this case, guys, we're going to use the 5 minutes. So this is the highest point that I recently grabbed, and this is the lowest point that I recently grabbed. And let's go on the first day. So as you can see, there was no retracements. It did not retrace to any specific retracement, which the next retracement is 61.8% fib. But the very exact next day, look at the reactions at these specific levels, guys. And let's talk about the first rejection. Not only is there a double top here if you know your specific candle setups, but this is also a signal for a sell. The volume in the first 5 minutes was literally telling you that there was no buyers whatsoever. There's 2 million sellers of shares that sold here. And in the next candle, there was only half of that at 1.1 million. But look at where it rejects, guys. It came to retest in the pre-market, the 61.8% fib level, but as you can see, we kept losing that level. And then at open, a double top, as well as we rejected that 61.8% fib level as well, guys. So not only could you have spotted that this is a double top as well as a doji type candle, which indicates a reversal back to the downside, we drop below this Fibonacci retracement level, which indicates that we're most likely going to continue on down. But why do I say wait for a reaction? The reason why I say wait for a reaction is because if I were to enter shorts right away, just because we get close to this specific area, it wouldn't be a bad idea, but you got to wait to see if buyers are going to continue on stepping in and if we're going to close above. You got to wait for your 5-minute closes and make sure you don't get faked out. Now in this case, you can see that we did try to go above this 61.8% fib level here, but we rejected it and ended up closing below with a decent amount of seller volume compared to buyer volume if you use that indicator. Next candle tries to come up to this general area, and again, another sell-off candle. Then again, another sell-off candle, and ultimately, guys, we break below down to the next retracement level, which if you missed shorts there, we're already rejected the 61.8% fib, came down to sell below the 50% fib, guys, and check this out one more time. We get a hard sell-off 5-minute candle close below the fib level. Look at this beautiful retest at that 50% fib level, so specifically to the T. What is this candle indicating? I'm gonna pop up a chart here and let you guys know that each candle tells a story. And if you haven't watched my candlestick video, that is very vital to trading. You have to understand how to use all of these setups and all of these tools and all of these technical analysis tools in your favor. So this is an inverse hammer indicating that there's literally no buyers here. Look at the seller volume, guys, it's going nuts. Then you get another sell-off candle, a little bit more buyers and then a little bit less sellers, but still, we're below the 50% fib level, guys. Whether you enter shorts there or enter shorts here at this next retest, which also is an inverse hammer, or if you want to call it a shooting star, whatever it is, guys, just know you got to wait for these 5-minute candle closes to tell you what the reaction is. And the reaction here is that every time we come to these 50% fib level, which is a very strong level after we already sold off from the 61.8% fib, it's indicating that sellers are here and buyers are not strong enough to take it above these specific levels twice. Not only do you get your first reject there, but you get another reject here. Now, if you missed all 3 of those setups, look at what happens again. Now, this would kind of scare me a little bit because look at how much buyers are trying to step in. Look at the buyer volume. There's literally no sellers here. But ultimately, guys, 5-minute closes below again, indicating that buyers are just not strong enough to take it on up. Sell-offs until we get another pump of buyers in the volume kicking in, and you can see that it actually started kicking in this general area. Now, this is why it's important to understand your candles, because look at the wicks to the downside. What is that indicating? That buyers are trying to step in. Hammer candle here indicating that's very strong. Volume is actually finally kicking in compared to when you compare it to this general area. There wasn't that much buyers, only on this candle. But you can see in this general area, there's no sellers and there's more buyers here. And you have to use all these tools in your favor because like I said, it's very important. You cannot just rely on one single thing. You got to have multiple reasons for why you're entering in a specific shorts or a call. Now you can see on this next 5 minutes, a nice break to the upside. You can switch your bias here because now we're above the fib level. And look what happens. Look at the reaction, guys. This is what I'm talking about. Look at the reaction. It breaks above. I would not take calls here just because it's showing you that, yes, buyers are trying to take it above the 50% fib level. But look at what the candles are trying to tell you. Now, this is my favorite pattern but I'm not going to go over that today. I just want you guys to understand that every time we get a 5-minute close above a specific level, whether it's a fib level or a strong support daily level, it's trying to tell you where we're potentially going to head to next, just off the reactions and just off reading these charts. Now, these are small sell-off candles, and you can even see that there's no buyers in the volume here. There's only 35,000 compared to 456,000 buyers, but we don't even close below the fib level. Now, if you missed the retest here in this general area, look at what this candle is telling you right here, guys. What is this candle? If you guys understand candlesticks, and I call myself the candlestick king on TikTok for a reason, because I love reading candles. And not only do you get a nice hammer candle here, but it's also right above the 50% fib level. We did dip down below, but guys, a 5-minute close above is indicating that we're trying to hold this level. So this is a nice entry for some calls here. Now, the reason why I was bearish when we're trending down is because every time we came below, we kept retesting these levels and selling off. This time we're above it and we're holding it. The candles are indicating that we are trying to hold above. And you get a decent bearish engulfing here with the inverse hammer or shooting star, whatever you want to call it. Buyers are slowing down here in the volume. And ultimately, we sell with a strong candle close below the 50% fib level, guys. So you got to wait for these 5-minute candle closes. You don't want to hop in off the 1 minute. You don't want to hop in just because we drop below on the 5 minutes, because you never know what happens. It might even do a hammer again like that. But in this case, we close below. Look at the reaction, guys. Another close below, tries to close in. Decent hammer, trying to hold it. Then again, another sell-off back below, and downtrend we go. Now that's just the next day after we already charted out, just watching the reactions. Hindsight in our favor, obviously. Now we will go over a trade that I actually took today based off the fibs, but I just want to show you guys with hindsight why it's important to wait for a reaction and not just enter just because. Now this one is a really nice reaction off of the way this one handled today, and I'll show you why. Now if you have no levels, and like I mentioned in the video before, if you created no support and resistance levels, but you want to use the fibs, these are perfect for you, because there's no reason to enter anything here until we finally react to your Fibonacci level. That's the whole point of this, guys, is you want to wait for a reaction at your Fibonacci level. You don't want to take a trade in the middle of nowhere just because. That is randomness. That is taking trades for no reason. That's not the best setup in your favor. You want to find the best setups in your favor, and in this case, let's talk about it. So there's no reason to enter any type of calls, although we are trending up with long wicks to downside. There's just no reason to enter calls here yet. Yes, the volume's kicking in. Yes, there's not that many sellers, but there's literally no reason until you get to this general area, which is your 50% fib level. Now, this is a level that we just recently talked about on the last chart, on the last one. But here we are again, guys. Bearish engulfing, rejecting the 50% fib level. Look at this candle and look at the volume. Compare it to the last time we came up to this area. There's not that many buyers. It's not consistent. Then again, we get another candle sell-off, basically eating almost all of this recent buyers. And again, we're holding below the 50% fib level, guys. We haven't even got a 5-minute close above. There's no reason to think that we're still going to continue on up. And there's every reason to think that we actually might reject here because of the reactions and the way it's showing. There's a long way to the upside, bearish engulfing, volume slowing down. So you got to use all these things in your favor, and you can enter short here. Now, if you missed it, that's totally fine. You can see that we've been trending down, nice sell-off candles, wicks to the downside indicating that buyers are trying to step in this general area, and then they do. Take it back up. And guys, look at this again. Another trading setup in your favor. Lower highs. Lower highs is an indication for a downtrend. Higher highs is an indication for an uptrend. So not only did we not come up specifically to the 50% fib level, so we're only 15 cents away from the Fibonacci level. But this is a lower high. And look at the volume, guys. This is probably the best thing you can take away from this, to be honest. There is no buyer volume at all, especially when you compare it to the last time we tried to pump up here. If you compare the buyer volume to the most recent buyer volume, the last time we tried to pump up around this general area, you can see, guys, this is why it's important to understand volume and to have a volume video as well. You got to watch all of these in your favor. You got to use all these tools in your favor. I cannot emphasize that enough. The buyer volume is slowing down. There's not that much compared to the first few minutes when we opened. Plus, there's a lower high, and you get a nice, decent doji here. Now, you can easily create a trade plan and say, I'm going to enter short around this general area, and I'm just going to cut it if we get a 5-minute close above, because we already rejected here, creating lower high. Most likely, we're not going to go above. So if you would have entered short there, you would have printed nicely. And guys, like I said, you just got to wait for these reactions. So we're going to continue on for a little bit more and show you guys some more examples, because I wanted to drill in your guys' head how important it is to use all the tools in your favor. But not only that, the Fibonacci levels are real nice support and resistance levels to play off of. A lot of times the market likes to react at these specific fibs and create some consolidation like how it did right here. Same thing with right here, another consolidated area, and we're closing below the 50% fib level. Guys, that's showing you that we're weak. We can't take it above. So if you missed all of those put setups, and even if you missed this one, because like I mentioned, there's no reason to take it when there's no area to take it at, there's no resistance, there's no levels here, but these are nice candles to take. I like actually shorting when I see these type of candles. Let's move on, and you guys can see that we actually retraced all the way back down to 38.2% fib level, guys, because that's what Fibonacci retracements are. They retrace to the next Fibonacci level. So we lost a 50% fib, and now we're down here at 38.2% fib. Many times people like to take calls as soon as you hit this general area or any fib in general because there's a potential bounce. Me personally, when we're already downtrending and there's already reasons to take shorts, I don't like to do those type of setups, but it does pay out for many people. Now for me, I would wait for us to get a little bit of buyers, see what the reaction is, see the volume, watch what's really happening. But guys, we are still creating lower highs. Now if you were to connect those wicks and draw a nice trend, you can see that we're still creating lower highs. We're in a downtrend still. So that's why I don't like to take calls on bounces as much, although they can pay out, and many people have shown me that they could pay out nicely. I like to wait for the best setup in my favor, and in this case, since we're already downtrending, I'm gonna wait for us to react and come back down and see how we react at this level again. Now, if we were to create some hammers here, or create some bullish engulfings, or create some consolidation above the 38.2% fib level, then maybe I'd be a little bit more bullish. Maybe if we broke this small short-term downtrend, then maybe I might take some calls. But you can see here that after we did bounce off of that Fibonacci retracement level, we respected this downtrend, started selling off, and we got a nice 5-minute close here. It's so important. We got a nice 5-minute close here below the 38.2% fib level. Now, the ideal entry is to take a retest setup, which is what I love to do, and I would like to take puts around this general area. And again, guys, it ends up printing, paying you, and look what happens here. This is a perfect example of waiting for your reactions, because let's talk about how we not only lost the 50% fib level, but we lost the 38.2, and now we all the way fell down to the 23.6. So there's 3 Fibonacci levels that got hit in a single day. That's very important and very vital to understand. Now, these levels were all created just by using the Fibonacci retracements. And you guys can see for the last example, look at the way we're holding this Fibonacci retracement level. This is what I'm talking about as far as when it comes to potentially taking calls or a bounce, is when we do come down to this general area, we create some consolidation here. And you can see that there's a little bit of a range here. Trying to create some hammers, wicks to the downside, indicating that buyers are trying to step in, and we get no 5-minute closes below. They all closing above. Then you get a nice bull candle. That's what I'm talking about, guys. You got to wait for a reaction in order to enter any type of trade. Just because it hits your level or the next Fibonacci level, don't enter puts just because you think it's going to go down to the next one. Although it did happen, you got to wait for these best setups in your favor. Because if I was to enter short just right here, just off of this candle, theta would have been eating me. I would probably be down 10 to 15% here and hoping and finally we get a break below, and then I can finally feel some relief. Now, it's more better just to wait for the reaction, wait for the candles to actually close below, and then you take a retest. That's the most important thing you can do. Wait for the reactions, guys. Now, that happened today. Now, that's a perfect example of why you want to use these Fibonacci's in your favor, as well as not only just the levels, but you got to use the candlesticks. You got to understand the volume, lower highs, higher lows, market structure. And if you're trading SPY, you got to use the Magnificent Seven, which is Apple, Microsoft, Google, Meta, Tesla, Nvidia, and AMD, all in your favor to see how they are moving. Now, if they're already downtrending and you're looking for puts already, then it's more ideal in your favor as well. So you got to find every single reason to be bearish and not just one single reason. I don't take puts in the middle of nowhere. I wait for these levels to get hit and reacted on, and you guys can see just off of today how these levels got reacted. Nice put setups here, double top as well, lower high, rejected the 50% fib level, bounced at the next fib level, ultimately respected that trend, sold below again, all the way down to the next fib level, and that's where we got the next bounce. So I hope that video helps for you guys, and I hope you guys finally understand why it's really important to wait for levels. On the next video, part 3, I will be showing you guys some live trades, as well as even going over some Fibonacci levels while they're being reacted on, and show you guys live what it looks like and why it's important to wait for these reactions. So we're going to go more in depth, more deeper. So I hope that helps for all you members, and if you guys have any more questions, I'm down to hop in a live chat, as well as we can even go over this in a live class sometime. Now, part 3 will be about me live trading these, as well as showing you guys why it's really important to wait for reactions, because in this video, I was just showing you guys hindsight of what it looked like and how the market reacted today, as well as it reacted in a couple days ago. So best believe part 3 will be more advanced in helping you guys understand live why it's important, and the way that I think while it's live, the reactions are everything. You don't want to be a predictor in the market. That's how you lose. You want to be a reactor. You want to wait for these levels to get hit, create some hammers or a rejection or a reason for you to be bearish or bullish, wait for some consolidation and watch the volume, read the candlesticks, and use everything in your favor to understand why you're either going short or long. Now, I hope this video helped you guys. Please give me some feedback, and I will create a tab for questions. And if you guys like these type of videos, best believe they will be coming out more, and I will update a lot of these other videos. Catch you guys in part 3.